All right, all right, all right. Let me remind you that trading is not appropriate for everyone. Why? Oh, it's risky. Past performance, good or bad, is not necessarily indicative of future results. So maybe yesterday was a good trading day for you. Today may not be a good trading day for you. So be careful. Be small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Thank you for coming on this journey we call Forex.Today. It's a YouTube community of almost 19,000 foreign exchange traders that meet every day to coordinate our watches, synchronize our satellites. No. Synchronize our satellites, coordinate our... No. Get together. That's all. And what do? We focus on our trade planning. Try to create trade plans technically and fundamentally. Feel free to ask questions and be involved. Take notes. Today we have a risk event. It's not fundamentals, it's news. And that's the speech at 10 a.m. After the terrorist attack yesterday, I took off trades and didn't add new trades, even though there were some good setups yesterday. I didn't add any new trades because of the risk event later today, but maybe I'll get some on after the news event. And then, of course, Sunday afternoon is one of my favorite trading times of all times. So anyways, thank you for being here. Thank you for being involved. Thank you for asking good questions. Thank you for being a subscriber. Thank you for clicking the like button. Thank you for being a client to Trader's Way. If you are not yet a client, please visit tradersway.com, open up a demo account, download MT4, download MT5, download CTrader, whatever you want. Here's the thing. At some point, you're going to need to trade real money because you will find success if you work hard enough. Therefore, it's going to come down to you need to have a relationship with a broker because after a certain amount of time, they either earn your loyalty and respect or they do not. So start that relationship now so you do have an execution partner to execute your trades, one that you trust. Okay? Tradersway.com. Good morning. Jumbo. So hope life is good. We're in this pause before the storm. Right? The pause before the storm. Let's take a look at how you answered the poll. Dave says, thank you for being you, Wayne. My pleasure. That's something I'm working on. But anyways, yeah, good morning. Hey, dollar pairs. Good, we'll do dollar pairs. I think that's it. Look at that. My trade plan hasn't changed. Bears are going to try to take it down. Bulls are going to take it up. So the question is a price like this a good one to buy? Or is it a good one to sell? Well, you can't buy high. Okay? That's it. You can't buy it high. So if there are bears in this world, they're thinking about selling it around this price. What do you think? Man, oh man, oh man, oh. Okay, what do you think? See, the thing is, even if you're a bull, I can't imagine buying it at a place like this. Okay? Mark says, hey, Wayne, great session in the swing trading group yesterday. Awesome. It was a heart-to-heart more than anything, wasn't it? Brutal honesty. So a bear is analyzing it this way is all I'm saying. Gee whiz. Okay, cool. Gee whiz. I don't know what's going on. I'm drinking Rockstar and espresso. Namaste. Okay, so anyways, that's that. Once again, this is now set up from a bearish point of view. Okay. And that's that. I am a bull on these things, of course, but maybe not right this second. Okay. Okay, maybe not this second. So, the market seems to be set for an announcement of a tapering schedule. If that doesn't occur, the dollar's likely to get strong. And yields in bills, notes, and bonds will likely come down. Pick says, Wayne, is it one-time payment for FX Bootcamp? Yeah. For the video training courses, yes. If you want to join the swing trading group, it's $99 a month. Cheap. Okay? Cash says, so you got out of your euro dollar longs because of Kabul? Yeah, terrorist attack, yeah. You have to also remember, Cash, and I did talk about it yesterday in the swing group, but I'll throw it down here. I expect to get out this time of year anyways. I expect up, and then I expect down, and then I expect up. So I'm already thinking about getting out. And then I'm thinking about, and this is yesterday, you have to go back into my mindset yesterday. I'm thinking of getting out anyways around the early part of September. And then I know I have Jackson Hole event risk, in which I don't think the Fed's going to announce a taper. Therefore, the dollar has a very high probability of getting strong. So I'm thinking about it anyways. I know the event risk this year happens to be Jackson Hole. So I'm like, so do I wait? Do I get out if the Jackson Hole doesn't go the way goes against me? But then when there's a terrorist attack, if it's bad enough, the dollar gets strong. And I'm like, oh, well, I probably am going to get out tomorrow anyways. Or Friday, I guess. Yesterday was Wednesday. No, yesterday was Thursday. Yeah, so I knew I was likely to get out today, and then a terrorist attack happens. You know what? I'm like, give me my money. I was up like 300 pips. I'm like, give me my money. Because I was already, right, to get out. And I'm more likely to be have more conviction closer to October than I do close to, right? So anyways, that's the thought process. And one of the things I discussed yesterday in the swing trading group is I really, really wanted to sell this. For days I wanted to sell this. For days. And I had to have the patience to wait. And now we're up in here. Okay? So it's showing my discipline, if you will. My risk increased, give me my money. I want to sell, but I can't sell low. I can only sell high. All this kind of stuff, right? Now, I think there's some on this account. There's some trades going, but, Okay. So I got to get through today. I'm not that concerned about non-farm payrolls next week. And then we got the Fed meeting. And then I think I'm on the free and clear plan. Okay. Okay. Let's reset this. Okay. So you can see there's a lot of different things you could look at. Okay. One of the things I'm drawing here is this idea that we had a trend, and not only have we consolidated a little bit, we've actually come down a little bit. Well, as a bull, I have to make a decision here. Is it a time frame issue or is it a change in trend? See, a time frame issue would be on a 4-hour or a daily chart, it just might be one of these things. So I wouldn't bail. But then I say, well, Jackson Hole in a terrorist attack changes everything. So I bail. I bail high. Okay. Now, can you draw the MACD on this? Okay. Here, let me draw a MACD for you. This is always fun. I'm going to draw it in a box here. And now I need a water line. There's the water line. And now I'm going to need a fast. So let me do this. Here, down, 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 down. Okay. Now I need my slow. I messed that up. Anyways, I messed that one up. La la la. Probably need to do it in darker blue anyways. Okay. No, 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 no. Wait. No, that's not going to work. Ah! You know what? So anyways, I'll leave it. So pay attention to this one. Okay? The crossover here, the almost crossover there. And I go insert indicators, oscillator. This is the wrong MACD though. Okay, now watch this. The scale is a little off because, let's try this. Not bad. I didn't line it up here. This, I was trying to get this. I did it a little too early. Anyways, you get the general idea. So there's a lot of things that says, you know what? Be patient, boy. Be patient, boy. Okay? This says on the hourly chart, this is a downtrend. Do you see that? Cash said, yeah, so I had dollar pairs, but I had a lot of yen pairs as well, Cash. So I didn't want to throw away a decent week because I was stubborn. And like I said, I was already primed to want to get out, and that was enough. That was enough. Okay? I didn't need 7 other reasons. Okay? So what I did is the market moved against me very quickly, just boom, out of nowhere. And I'm like, wrong time of day for a move like that. I'm like, what's going on? So I very quickly Googled, and all of a sudden, boom, multiple explosions at the airport in Kabul. So then I logged in a couple of news stations, and they're like, yeah, there's dead Americans. I'm like, all right, out, done, out. Give me my money. Okay, because I was risk on. That's not risk on. I'm just out. Give me my money. Okay. All right, so Aussie. Okay, what is it that we want? We want something like that. But again, let me say the market is surprised today. Let's pick on the market a little bit. Let's say the market, the aggregate, the mean average of market participants believe there's going to be an announcement today by Fed Chairman Jay Powell. And they think he's going to announce a taper schedule. Cool. I think they're wrong. So what happens if the average participant is wrong? Most likely dollar strength. So that's my risk, because I want dollar weakness. So I have to be RWA for that today, because I don't know what's going to happen, nor do I know how market participants are positioned, or how they'll change their positions, or what. So I just have to say, look, I don't want risk going into the event, and once it happens, I need to be prepared one way or another. I'm going to trade ya. Okay? But I got to go in sort of naked and afraid. Okay? Let's do some commodities. Okay? Let me zoom out here. And we're back on the move. Oops. Okay, that's probably a range for now. Interesting thing is, if we're on our way to 70, then Brent is on its way to 75. Well, Luis says there's 3 questions, but they're all sort of related, so that's really only one question. For example, will the taper begin in September? No. Is Delta a bigger concern? Or is Delta or inflation? Well, inflation's not a concern, and Delta would be the reason to not do the taper. So they're all the same. What does the central bank's post-pandemic policies look like? Well, we're still in a pandemic, so that would be irrelevant. Okay. But you'd have to say, well, you got to manage the yield curve and all that kind of stuff, which, managing the yield curve, having QE would help you do stuff like that, right? Mr. Kennedy, just to clarify, if the Fed tapers, USD goes up. No. Not no. No. If they don't taper, it goes up. So check it out. If Fed doesn't taper, Okay, what happens? Fed continues to buy bonds. So, what happens? Bond prices rise. Okay? So, you know they're going to rise in SEP and October until maybe you think maybe they'll make an announcement in November or December. So you know for at least 2 months bond prices are going to rise. So what are you going to do knowing that bond prices are going to rise? How do you make money on that? If you know for the next 6 to 8 weeks bond prices are going to rise, what do you do? No. Bonds. You're in the bond market. How do you make money? You think bond prices are going to rise for 2 months. What are you going to do? You buy bonds. Jesus. So you go out and buy bonds, right? Come on. Why would you buy bonds? Because bond prices are going to go up. Or let's say now you're an emerging market country, whatever. I won't pick on anybody. And you want to buy some treasuries. Right now they pay 1.34%. The Fed comes out and says, no, they're not going to taper anytime soon. They're still worried about the labor market. Okay, so if you were going to buy bonds anyways, American bonds, you want to lock in that immediately because this will go down to 1.24, maybe even 1.14, maybe even 1.04. You don't know. So if you're going to do it, oh my God, you got to buy that now. Because you know if bond prices are going up, the yield will fall. And why do you know bond prices are going up? Well, right now, yield is rising, which tells you a lot of people are exiting the bond market because they think the Fed's going to exit the bond market. But then we just might find out, oh my God, they're not going to exit. They're going to buy $120 billion in bonds in September. And then they're going to buy another $120 billion in bonds in October. Oh my God. $250 billion. Well, then prices are going to go up, yield's going to go down. Get in the game now, son. Okay, you see? But ultimately, I don't know, and my job is to be ready, willing, and able to do what I need to do to survive. I might have to kiss you. I might have to kill you. Whatever I need to do. Anyways. So yeah, that's it. Okay, good. One way or another, I'm gonna trade you. Oh, how did my plan B do? La 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 la. Okay. Look at this. Up to the resistance level and full breaks. And now what? Plan A is working. Cool, right? Mr. Kennedy says, but then there's more money in the system. So the value of the USD should go to, what more money in what system? If the Fed is buying, not buying, oh, what? No, it's the, first of all, it's it's where the USD goes. If foreigners are buying the bond market, dollar goes up. We'll call this international. Okay, if Americans buy bonds, nothing happens to the dollar. Okay. Now, on the long run, you say, well, but then all Americans get filthy, stinking rich. Well, not all Americans. Some Americans get filthy, stinking rich. But, you know, you're talking about, okay, then people are going to go to Walmart and buy stuff at Walmart, and that's going to drive down the value of the dollar. Yeah, but not today. Okay? But if institutional investors around the world suddenly front-run the Fed by buying the bond market right before a huge spike in the bond market, that'll impact us now. Okay? So again, Mr. Kennedy, you're talking long run, I'm talking short run. Okay? So yeah, you're saying more money makes a weaker dollar. Sort of. I have to qualify that, for example. More money. So let's say more money does not necessarily equate less value. More money in the interbanking system does. So when the Fed, and I hate when I say this, but I'm going to say it. When the Fed prints money, does the money immediately go into the interbanking system? No. Where does it go? It's in America. It goes into the banks. Okay, great. That has nothing to do with the dollar. Okay? But now you're saying, well, then there's more money in the market than that money eventually gets to a person, and a person then buys something from a foreigner. Yeah, but that's probably not today. Okay? But if an investor from Indonesia buys $1 billion today, okay, that means there's less money in the interbanking system, and or less dollars, so less dollars. So therefore, the value of the dollar goes up, and then they buy bonds because the Fed announced that they don't have a tapering schedule yet. Okay. However, the amount of dollars, not in circulation, but in the M0, if you will, has gone up. The M1 might have gone up. The amount of money in the United States has gone up, but the value of the currency has gone up too. Okay. So anyways. Now, here's how I am emotionally prepared for today. I don't expect anything. I expect the market might move. It might not move. It might be short-term volatile, all that kind of stuff. I know I'm afraid of short-term dollar strength, and I want long-term dollar weakness. So I'm ready for that. Both of those things. And that's that. Okay. Let's clarify. Tapering is tightening. Not necessarily. No, that is not true. To taper is to reduce. Yes. So here's what I think will eventually be announced, but not today. January let's just do it this way. Jan, Feb, Mar, let me start over again, a third time. January, February, March, April, May, June, July, August, September, October, November, December. Okay, minus 10, minus 10. Okay? So what does this mean? Well, in March, there's still 100 billion of free money entering the market. And you're like, well, it's tightening. Dude, we're still adding 100 billion free money. It's just less gasoline. Okay? Okay, whatever. So now there's another 10 here, negative 10, negative 10, negative 10. But there's still stimulus, negative 10, negative 10. It's not tightening, there's just less stimulus, negative 10, negative 10. And by the time we hit December of 2022, we are now contributing 0 billion. While that happens, not interest rates, but yield, a different type of interest rate, will rise. But that's not tightening. That's a normalization of the yield curve. Okay? I think the Fed could go way beyond what people are saying in the media. They're saying now 2023. I'm still saying 2025, maybe 2026, maybe 2027. The Fed raises interest rates. I think we could go Powell's entire second term without raising interest rates. I think he's much more dovish than what other people think. So that's just my point of view. Now, of course, I can be wrong, and I will adjust as we go. But I don't think people quite understand what they're talking about. And there's my bias. Okay? So why should the Fed cut interest rates immediately? What are you guys hearing? Why should the Fed taper now? What are you guys hearing? Why must the Fed act immediately? You tell me what you're hearing, and then I'll comment. Why is it imminent? Why have to act, right? Why do they need to taper? Why do they need to raise interest rates in 2023? Just tell me why. Okay? Hey, Japan hasn't raised interest rates in 25 years. So why should the Fed raise interest rates next year? Inflation. Runaway inflation. Great. Let's talk about that. All right. So let me do this. Let me get my drawing pen. Okay. Let's do used car market. Okay? Great. So we have prices are high right now. And here's quantity. Okay? And demand is like this. Okay? Okay, here's the supply. All right, so let's go through this. The used car market right now is unbelievably expensive. Some have said that used car prices are up 50% now. Massive inflation. Why? Well, there's a semiconductor shortage in China. So there's no computer chips to make new cars. I was just at the BMW dealership, and in their giant showroom, they had one car, and it was from last year. I said, hey, can I get a loaner? I want to go home. They're like, we sold all our loaners because there's no cars. They had no cars. So you can't go to BMW and buy a brand new BMW right now. They don't have any. So what are you going to buy if you need new wheels? You buy a used car. Okay? So what has that done? It's increased demand for used cars. Okay? So in a normal, let's say there's 80 million cars, I don't know, and now sold every year. And right now there's demand for 100 million. Okay? Prices have gone up. Okay? I can do the reverse of this, of course, because this is economics. Scheiße. How do I know? Don't tell me. No. Did I lose that? Gold, dang it. Son of a... How do I undo? Oh. Good. All right. So what if, this is going to be difficult now, so to erase, I'm just going to draw over it. And draw over. Okay. New cars. Oops. New. Okay. New cars. Oops. Okay. New cars. So how do you do that one? So let me go back to drawing over. Okay, I got to get rid of this demand. Okay. Okay, here's the new car market. Okay, and demand is supply of new cars has moved this way. Okay, and now we have a new equilibrium point over here. There's not enough. Now we're down to 50 million and prices have gone up. Okay. Now, I want you to think about this. You can't get a new car, but if there was a new car, it's not on sale. Do you understand that? I think you do. It's not on sale because there's 100 people willing to buy a brand new BMW. Or like, you got a brand new BMW? Yeah, it's really nice. Boom, I'll take it. Okay? Now, can the Fed do something to impact BMW's ability to get brand new BMWs on their lot? No. They can't. Well, then what about going back to the used car? Well, the reason there's no new cars, right? The fact there's no new cars means, like, in a normal market, you have those that buy used cars and you have those that buy new cars. Right now, if you need to buy a car, you can only buy a used car. And that's why prices are high. So one, prices are high because there's no supply. So the Fed can't do anything about that. The Fed's not making semiconductors. So then it goes to the other one, and now demand is high because they're making they're making not a compromise. What is it when you're buying something as an alternative? I forget what you call it. But anyways, so as a consequence of this, they're buying that. It's a behavioral issue. Once again, the Fed can't do anything about that. The Fed can't use monetary policy to lower lumber prices, to lower concrete prices, to lower steel prices, to lower wheat prices. The Fed's $120 billion a month is not getting more truckers. I was reading about a major restaurant chain in the United Kingdom had to shut down 120 restaurants because there's no chicken. Why is there no chicken? There's no truck drivers to drive from the processing plant to the restaurants. Morena says, is that only for BMWs? No, it's everything. So like I was saying several webinars ago, when I went to Florida, I drove from Atlanta. So you have to go all through Georgia, through Alabama, okay, and then into Florida. And you go through lots of little towns. For some reason, even though Atlanta is a major city and everybody goes to the beach, there isn't one easy giant highway to take you to the beach. It's kind of weird. So you got to go through all these tiny little back roads, little cities. And guess what? I saw entire car lots with nothing, not even one car. They just shut the door. No cars, it's over, right? And then I went to Chicago. Then I went to northern Wisconsin, which means I had to drive through Illinois and all through Wisconsin, going through all kinds of little towns. And I must have seen at least 100 car dealerships. Okay? And then I was in New York City. So I've been around. In a month, I went from the southern border to the northern border of the United States. And you know what? There are no cars. And then just recently, I was at the BMW dealership. They don't have any cars. They don't have cars. Nobody has cars. So can the Fed fix this? No. But what the economic model suggests, in a situation like this, prices are high. That's where our transitory inflation comes from. Okay? That's what transitory means, because in 2 years, we're not likely to have that problem. But the Fed can't fix it. So right off the bat, if you're listening to somebody that says, oh my God, the Fed has to taper, the Fed has to raise interest rates, the Fed has to do something because inflation's out of control, they have no economic basis for what they're talking about. That person simply does not understand the picture. They think they do. They're like, high inflation levels, the Fed should raise interest rates. Okay, that's grade 5 economics. Sorry, if you're American, 5th grade economics. But they're not understanding the complexities of a global economy or the impact of, or how monetary policy works. See, I want you to write this down. I'm about to tell you something important. Okay, so get your pen ready. Monetary policy. This is what central banks do, monetary policy. Impacts demand. When they want to increase demand, they increase the money supply. Monetary policy. When they want to decrease demand, they reduce the supply of money. Nothing they do impacts this, right? The supply of the market. They can increase demand by the market. They can decrease demand by the market. The Fed can only do this. I knew it. Okay. Hang on. I got to go through this elaborate process again. Hang on. Okay. The Fed okay. There's nothing the Fed can do to fix a supply constraint. Right now, we call this an exogenous shock. This is a global pandemic. It's not typically in your business model or your economic model. So here's a normal world. Supply and demand meet. If prices get too high, okay, if prices go up too much, demand goes away. If there's too many cars, prices come down. Okay? So the Fed can only increase demand or decrease demand. Okay? But that's not our problem right now. If 10,000 Americans decided to buy how about this? Let's say this. If 10,000 BMWs showed up in the United States today, spread across all car dealers in America, they would all sell today. Okay? You understand that? If 10,000 cars just magically showed up at all car dealerships across America, they would all sell out. The car dealer would make, let's say every car dealer gets 3 cars. It'd be even less than that, 2 cars, right? Every car dealer would just call their clients like, hey, we just got in a 5 Series. It would just be a few phone calls and their clients would just buy them. Every single car would sell today, I'm sure of it. One day, all 10,000 cars would be sold. So demand's not a problem. Think of it. I'm in the service department. I'm like, give me a loaner. They said, we don't have any. And I said, oh, yeah, I was supposed to book it earlier. He's like, no, we don't have any. We don't have any out for loan. We sold all of them. Like, they've sold everything. They're trying to stay in business, guys. I'm sure I could buy the tables and chairs in the BMW dealership. I'm like, oh, how much do you want for this chair? I'm like, oh, right? Like everything was for sale. They have to stay alive. They've sold everything already. Okay? So anyways, so be careful when you're listening to whoever you listen to and they're like, the Fed must act. Just look at inflation. It's out of control. You have to say, dumbass said what? The Fed has to act because of inflation. Dumbass said what? Okay. If you don't believe it, why close the positions? Because what I'm trying to say is that could create dollar strength, and I'm selling dollars. Now, first of all, Robin, I'm not saying it's the right decision. Remember, what I'm telling you is I don't know in that situation. Okay? I don't know. But I believe there's more than reasonable risk the dollar gains strength today. And I'm a bear. Also, a terrorist attack, dead Americans in a situation where America is retreating. Almost certainly there's going to be more terrorist attacks. This could get bad. This could get ugly. 100 people died yesterday. And there's almost certainly hundreds more going to die in the next coming days. That creates the dollar strength again. Like, dude, I don't know, but I think there's pretty reasonable risk. So I must act. Okay? Okay? No, not to a possible taper, to a possible not taper. My opinion is the Fed's not going to announce a tapering schedule. Let's be clear. I don't think they're going to. I believe the Fed is dovish. So somebody in the swing trading group yesterday said that people are saying the Fed is hawkish. I hear this too. I heard somebody on Bloomberg today say that they think the Fed will announce, and they might. I don't know. I don't know. See, I don't know. But their opinion was the Fed will announce a taper, a schedule, and it's going to be faster and sooner. They think it's going to be announced today and maybe start in September or October. And they're going to taper fast. Like I just said, look, maybe they start next year at 10 billion a month. This person's like, they're going to start now and they're probably going to do like 40 billion a month. And by the end of the year, they're practically done. I don't know where they get this opinion. I don't, but they might be right. They might have better information. They might interpret the information that's out there better than me. I might just be making just a huge mistake. I might be 100% wrong. I could be as wrong could possibly be. If I was any wronger, I would be more right. Okay? Okay? You understand this, guys? I don't know the future, but I need to be there in the moment and I need to know what I want to do. Okay? But I am not hawkish. I don't believe the Fed is hawkish. My interpretation of Fed speeches, Fed meetings, Fed reports, Fed Q&A, Fed is that they're dovish. One example that I gave the swing trading group yesterday, man, you guys are getting a lot of alpha for free, is that the fact that the Fed did Jackson Hole via Zoom and not in person, what does this tell us? Let me make this point clear. 60 days ago, okay? 60 days ago, the Fed was going to host the meeting in Jackson Hole. Just like the good old days. They get together, they rub elbows with other central bankers from around the world. They get to hang out with the central banker from the Bank of England, the central banker from the Bank of Japan, the central banker from the ECB, the central banker from Canada. Dude, they just get together and it's just, they drink, they smoke, and they bullshit. What are we going to do about income equality? Okay, this is what they're going to talk about. What are they going to do about income inequality? I'm like, dude, I thought you were supposed to stabilize prices and increase jobs. So just make sure people have jobs. But whatever, they're going to talk about it, philosophical things. Great. So 60 days ago, they were going to meet in person. And it was the highlight of the year. This is like fun. This is like vacation for them. And then 6 days ago, they said, no, we're going to do it on Zoom. So what does that tell you? When I heard that, I immediately told you guys. I'm like, that's it. That's the message. They just gave us the message. Don't listen to what they say. Pay attention to what they do. Okay? The Fed has got a $1,000 handbag and cheap shoes. Okay? So I look at that and they're not hawkish at all. They're super concerned about COVID. Okay? They're dovish. They're afraid. And rightfully so. If they weren't afraid, they'd get together and party. Dude, they're really disappointed, but they're like, dude, the United States is not doing very well. Did you see all the COVID numbers? People are wearing masks again, right? The Fed sees this and they're like, this is a real risk. And summer is ending soon. We're all going to get together for Thanksgiving. And by the time Christmas hits, we're going to be in lockdown. Cash said the Kabul incident was an opportunity to buy the dip. Yeah, but you know what? That I still had the second event risk. Also, Cash, there's always, I mean, look, I'm going to be doing the same thing for weeks and weeks and weeks and weeks and weeks, right? I don't have to be in every trade. I don't have to be in the perfect trade. I don't have to be in the first trade and hold it all the way to the end. Now, my first trade was like, you couldn't get any better, in my opinion. It sounds arrogant, but dude, I bought it on the monthly M2 in the first hour of the month, and it went straight up. I think my biggest drawdown was like -4, and then next day I'm up 100, right? So anyways, right? So I don't think the Fed is hawkish. That's my point of view. But we'll find out. It's my point of view, but I actually know nothing. And I don't know how other traders are going to behave in America. I don't know how other traders are going to behave outside of America. I can try to build models to do things to say, the Fed's going to, when the Fed tapers, the central bank in South Africa will raise interest rates, and I can explain why they would do that. But ultimately, I don't know what's going to happen later today until it happens, and I have to pay attention to how others respond. And very often, I have to be prepared for people to respond in ways that I think is inappropriate. I have to, right? So the analogy I gave yesterday with the swing trading group is I have to drive my car cautiously. I'm carrying my wife and children with me, the most precious assets I own. And I have to drive appropriately. I have to have a safe car, a car in good working condition. I always shoulder check, right? I always stop at lights. When the light turns green, I always wait a half a second to make sure there isn't some guy, right? And then I go. And I'm very, very safe. So I'm not worried about me. I'm worried about a drunk driver. Some a-hole couldn't take Uber. So he gets in the car drunk and he hits us and kills us all. Not, hey man, not my fault. Doesn't matter if it's my fault or not. Okay? So I got to be worried about the rest of the market. I know exactly what I intend to do. So I'm not concerned about me. But the market could just be crazy today. Now, people will tell you, and I heard it again today, again on Bloomberg, maybe the same person that was hawkish. They were explaining how the Fed had blindsided the bond market, and that's what created the Fed taper tantrum in 2013. Now, I was there when that happened. Every single day I met with boot campers. And for months and months and months and months leading up to that announcement, the Fed told us they were going to taper. They told us. They told us. I was there. I've read it. Day after day, we had full discussions. And then they announced the taper and the market freaked out like, oh my God! The same way they freaked out in June. Like, who the hell thought they were going to taper in June? Apparently a lot of people. Well, then a lot of people don't have the education to make the decision properly. It doesn't matter though. Remember, I was a dollar bear and the dollar got ripper strong. I could have blown up my trading account. I'm right. Doesn't matter. Nobody cares. Hey, I was driving safely. I was driving the speed limit. I was looking left. I was looking right. I just didn't expect someone to hit me dead on because they passed out. I wasn't in the fault. It was their fault. They were drunk. They hit me and killed me and my wife and my children. And now we're all in heaven. Not my fault. It doesn't matter. Okay? So I'm ready, willing, and able to act. Okay? But I'm ready for everything. Right. So anyways, cool. So, look, there's not much to discuss at the moment because we got to wait. So I'll give you time. So it's less than an hour away. So I'll give you time to gather and group and all that kind of stuff, and clear your slate, and I don't know, get popcorn, use the bathroom, and then the Fed meeting, the Fed speech is in 55 minutes. So I'll leave you to be the trader that you've trained all summer to be. You're either, ready, willing, and able, or you're not. You're either going to try to make a lot of money quickly, or you're going to try to make wise investment decisions. You're going to have trade plans that you're going to set in your mind now. How will you behave if you see dollar strength? How will you behave if you see dollar weakness? What kind of price action are you going to trade? Do you know where support and resistance is on the 4-hour? Or how are you going to trade the 5-minute? What's lot size are you going to use? How close of stops? Are you just going to scalp the volatility? Or are you going to put trades in and hold them? How do you know you're wrong? When are you going to stop trading, if need be? I want you to think about all of this now. I want you to meditate and reflect and prepare. Because if you practice with your mind's eye, and this is straight out of my book, your mind is internal. Light from your computer screen is emitted through a light emitting diode into the atmosphere, and it's received by your eyeballs. Comes into your eyeballs, and now the photons are converted into electrical chemical energy and is sent to your brain. And the brain says, oh, I see brightness and I see colors. Then a different part of your brain says, oh, well, this is a take profit zone on Brent crude. That's a pivot profit zone. This is a buy zone, probably for day trading Ethereum. And it starts interpreting things. Plan A, plan B, plan A, plan B. My point is, it doesn't actually see. It's taking electrical chemical energy and then creating this image for you. If you stop and think, you can close your eyes and you can, right? And I'm closing my eyes right now. Maybe we should do a kumbaya version. Okay? Okay, you can stop now and you can close your eyes. And you can think of a chart. Imagine you're watching Euro USD on a 5-minute chart. And then Jerome Powell takes the stage and the market starts to move a little bit. Starts to, it's up, it's down, it's really edgy. And then he says something and the market takes off. Now you can, with your eyes closed, you're seeing this. You can see the chart. You're looking at candles. You can see the colors of the candles in the background of your chart template. You're looking at moving averages. You're looking at the spike and the pullback, and you're thinking, well, maybe I'll use a Fibonacci, or maybe I'll use the rectangle drawing tool and I'll grab the old resistance, and maybe that turns into a roll reversal and I can buy it at that support, and then we can take it up to here, take it down to there, and you can picture that. The color of the pivot profit zone, that sort of weirdish, pinkish, reddish area. Will you get out on the daily? Will you get on the weekly? Is this something you can hold for a long time? You should be able to see your chart right now with your eyes closed. The colors, the moving averages, the way you draw your Fibonacci. You can even see the mouse moving. You're drawing the Fibonacci retracement. The thing is, it's as real as looking at real-time candlestick data. To your mind, you can see the colors. It's real. It's not a visualization. Now I open my eyes and now I can see my charts again. But once again, that's just electrical chemical energy that's been converted. Or electrical chemical energy because what you did is you pulled from memories to say, what do my chart templates look like? What does volatility look like? What does a pivot profit zone look like? But you're pulling, and that, with your eyes closed, you're using electrical chemical energy to move memories from one part of your brain to a different part of your brain that is forward, and it says this is now. You see this. Or you can open your eyes, take in photons, convert that to electrical chemical energy, and it's seen here. Well, whether you grab a memory and put it here or grab external data and put it here, it's still now. There's no difference. Now, the thing is, if you rehearse, okay? If you rehearse, like I'm talking about this, right? Where you rehearse what's going to happen in an hour. It's the same as Michael Jordan sitting on the bench in the locker room alone with his eyes closed, hunched over, visualizing the game. If you were a child of the 1980s in Canada, you will remember very well Wayne Gretzky behind his own net with the puck. And everyone else is skating in this complicated dance of this guy's going here and there's people are going around him and people are going out here and he's behind the net. Not for a second, for 5 seconds, 6 seconds, 8 seconds, 9 seconds. And then go. And you know he was going to score. The Edmonton Oilers were about to score. What was he doing? He was visualizing. If you watch the young Tiger Woods when he was in his prime, he would look down the fairway and he'd say, well, I got to hit this and I got to do that. And I got to drive there. I got to avoid that. So, and I've been slicing a little bit, so I got to make sure this is done properly and my swing is in there and all that kind of stuff. So I don't want to make those mistakes. But okay, great. So I want to land it there. And that will give me the better for the next shot. I'll have a better approach. All right. So that's 310. Right there, just short of that sand trap. And then watch. He blinks. You watch it. I think it's even twice. He was coached on how to visualize. And when he was ready to commit to the shot he was going to hit, and he's got all the noise, he's put it all together. All right, don't slice it like the last one. Do this, and that will set up the next shot, and that will set up the next shot, and all that kind of stuff. Okay, right. Just get it in front of that sand trap. And then commit. And all the noise goes away. He's already hit the shot. He's already rehearsed. So here's the thing. Now when it happens and Jerome Powell takes the stand and the market starts to move, you've already rehearsed and your brain will recognize what's happening because you've already done it. Do you see that? You'll say, oh, I recognize what's happening. And now maybe you can trade that with a little more confidence. And you've already prepared yourself. Okay, I'm not going to chase price. I might be aggressive getting in, but I'm not going to chase price. I still have to buy the dip. Okay, maybe take it up there. Don't do this, do that. Okay? Or even better, if something happens and you don't know what's happening. It's just like, oh my God, I didn't expect that. Back off. Don't worry about it. You can trade it later today. You can trade it tomorrow. You can trade it next week. Don't worry about it. Have you ever seen the very ending of one of the greatest movies of all time? What was it called? Princess Bride? No, not that one. Talladega Nights. And he's like, hey, Dad, if you ain't first, you're last. He's like, what the hell does that mean? He's like, you told it to me when I was a kid. I lived my whole life. And he's like, that doesn't make any sense. You could be second. You could be third. You could be fifth, for crying out loud. Okay? Look, you don't have to trade this today. Yeah, it might be a big move. It'll be all right. You're going to be doing this for 20 years. If anything, this is risky. And what does the Wayne do? I remove my risk. And if it moves today, I'm going to try to catch it. If it doesn't move today, or maybe I'm busy. I have tractors showing up to my house today. Maybe I'm outside with the tractors watching them rip up my yard. Cool. And I miss it. Don't worry about it. I'll catch it on Sunday and Monday. I'm going to be here another 20 years. I don't need today. Today, I don't take big risks. I don't need today. I don't care if I make 300 pips today. I can make 0 pips today and I'll make 300 pips next week. Like, it's just a job. I do it exceptionally well, but this is a risky period in time. I might trade it. I might decide not to. Because I'm not trying to get filthy, stinking rich. I'm trying not to lose money. And there's a big attitude difference. Okay? Simple enough. Be the trader you want to be, guys. Prepare now. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. Good luck, huh? Remember, be the trader you want to be.